Hey guys, welcome back to the channel McNallie Money, home of all things stock, investment, and personal finance related. Now for today's video, we're going to be doing a follow-up on a company that we originally covered about a year ago. The name is Eyecare. This is a Canadian-based company, you guessed it, in the eye care or eyewear business, and they've seen tremendous growth over the last 12 months. So I wanted to update you on the company, their operations, and my thoughts on the company's share price moving forward. Now before we get into all that, please take a second, hit the like button, you guys. It's a big help to myself and the channel. If you're not already subscribed, McNallie Money, feel free to join. And let me know in the comment section below if you're currently holding shares of Kits, if you've tried their products out yourself, and what your thoughts are on this sector moving forward. Now with that being said, let's get into today's video. Okay guys, so that's right. Today's video, we're going to be providing an update on Kits Eyecare Limited, trades on the Toronto Stock Exchange under the ticker symbol KITS or KITS. Now this is an eye care company. It's based in Vancouver. We've covered it on the channel previously. However, they've seen tremendous growth over the last 12 months, and I continue to see them hitting all-time highs on my tracker. So I wanted to get an update out in advance of their first quarter conference call, which is scheduled, as you can see at the bottom here, for Wednesday, May 10th of this week. Now I'm going to do a quick refresher on what it is Kit's business model is all about, but before we get into that, I wanted to call out a couple of things. So number one, you can see market cap is now sitting north of $150 million. I've got a 6-month chart pulled up on the screen. You can see a major rally in share price all the way from about $2.50 back in November of last year, all the way to a high on April 28th of $5.30. Now we have seen a little bit of a pullback. We're going to talk about my thoughts on that towards the end of the video. But as mentioned, this is a company I've covered in the past. And before we get into the meat and potatoes of today's video, I quickly wanted to bring that one up. So this was put out on March 3rd of last year, so just over a year ago. You can see the share price at that point in time was $2.63 Canadian, and the market cap sitting at about $81 million. So this is essentially a double up for anyone who took action and bought in at that point in time. Now, unfortunately, this is one I personally missed. I even sent it to a close friend of mine. His son's name is Kit. I thought it was ironic. I said, hey, this is definitely one to keep an eye on. I'm really excited about this business, but for whatever reason, you guys, hindsight is obviously 2020, no pun intended. This is one that I got away from, and unfortunately now I'm paying the price for that. So definitely let me know in the comment section below if you were able to jump in, take advantage, pick up some shares, and what your average cost was on Kits, and if you're still in this trade at the time of posting. Now, as a quick refresher, Kits is a rapidly growing, obviously, digital eye care platform providing eyewear for eyes everywhere. We offer customers access to a vast selection of contact lenses and eyeglasses, so they participate in both realms or sectors, including their own Kits designed products. And those are made in-house. They're really setting the bar in terms of turnaround time, cost of manufacturing, and delivery times, which we're going to look at, as well as a robust suite of online vision tools. Our efficient digital platform, backed by our industry-leading manufacturing and designs, which I just mentioned, removes intermediaries and enables us to offer great prices and deliver made-to-order personalized products with incredible care and accuracy. We strive to delight our customers with our competitive prices, a convenient digital shopping experience, fast and reliable delivery options, and an unrelenting focus on earning our customers' lifelong trust. So this is really what caught my eye in terms of the business model here, you guys, is all of the manufacturing is done in-house, and it's direct to consumer via their digital or online portal. So if you think about the traditional eye care or contact lens industry, there's a lot of middlemen, there's a lot of people taking a cut, and oftentimes, as you're well aware of, if you wear glasses or your kids wear glasses, the price on a lot of these lenses and frames is absolutely astronomical. Now this is a look at the company website here. This is the customer facing website. So a traditional eye care look and feel here, you guys. You can see $99 off your first pair of glasses using the code WELCOME or shop now. We're going to talk about their customer experience and the level of retention or stickiness of their customers, which again is really setting the bar in this industry. You can see on Trustpilot just about 7,700 reviews with a 4.5 average star. And if you jump into the actual products, you can see a variety of different lenses, frames, and price points, ranging all the way from that introductory free offer all the way up into the multi-$100 price points, again, including custom designer brands like Tom Ford, their in-house brand Kits, which we just talked about, and a number of other designer lenses. So now that we've refreshed our memory on what it is Kits Eyecare is all about, I wanted to jump into the investor presentation. I'll leave a link to the company website in the video description below, so feel free to go in and take a closer look. And I wanted to really talk about the story here, the past, current, and present for Kits Eyecare and where I think this company and share price are headed over the next couple of quarters. So as you can see, this is a relatively new company founded back in 2018, again in Vancouver, British Columbia. And despite only being around for approximately 5 years, this now represents over or in excess of $100 million annual revenue run rate organization with revenue growth of just shy of 30% in Q4 of 2022. So they're continuing to throw up double-digit revenue growth quarter over quarter. In addition to that, they call out 5 key differentiators. So their team has a deep skill set and proven track record of executing in the eye care technology and consumer industries. Obviously, as we've seen and they've proven with Kits, we operate in a compelling $76 billion US eye care category comprised of over 48,000 optical shops. This is continuing to grow as the population ages and people require new contact lenses or glasses. The third point, our state-of-the-art optical Gigafactory, which I'm super excited about, gives us a sustainable competitive advantage with the lowest cost of manufacturing and best-in-class service. So that is absolutely critical here, you guys. The lowest cost of manufacturing is a huge competitive advantage for Kits, not to mention the turnaround times because they have this manufacturing in-house. Now, the fourth point they list out, their business model is focused on accelerating customer growth and retention. So there's that keyword retention again, delivering predictable and recurring revenue, which investors love. And the fifth point is accelerating value creation as revenue grew 30% in Q4, which we just alluded to, and 65% of their business is now considered recurring with over 780,000 active customers. So once people get into the Kits ecosystem, they see how user-friendly the platform is, how quickly they receive their glasses or contacts, and the price, they're hooked and they continue to come back time and time again. Now this slide here does a great job of talking about the brand expansion and that recurring growth in revenue that we're seeing quarter after quarter. So you can see in all 4 quarters of last year, over 30% revenue growth, which is absolutely phenomenal. And gross margin continues to improve from 30.5% in Q1 to just shy of 34% in Q4. And again, that's because of their in-house vertically integrated strategy that allows them to retain most of the profits, if not all of the profits, within their Kits umbrella. And they do call out they're actually dropping or declining the amount of money they're spending on marketing each year as the organic traction of this brand continues to take hold, and they're now relying more on word of mouth or customer referrals based on that massive segment of customers, again around 780,000 active customers that we saw on the last slide. So with a market cap of around $150 million and a quarterly revenue run rate in the neighborhood of 26 million, the company is currently trading about 6 times their quarterly revenue or about 1.5 times their annual revenue run rate. So now that we've looked at revenue, I wanted to call out a few of the other key metrics for this business, including repeat revenue growth, which was up 128% year over year, delivering a total of 240 or almost 250,000 glasses in 2022. The revenue figure we just talked about, 26.2 million in Q4 alone. Gross margin, again, is up to nearly 34% in Q4. Their marketing efficiency has increased and it's now requiring about 7.5% less spend year over year. 65% of their business or revenue is from repeat customers, and that impressive and growing customer base, which includes 780,000 active customers, which is up 15% versus 2021 and 56% versus 2020. So you can really see across the board on all of these key metrics, you guys, we're continuing to see impressive growth both on a quarter over quarter and year over year basis. And for that reason, I definitely think this is still a company to watch and there's still room to run in terms of their growth potential and share price. Now, a couple of slides ago, we talked about this optical lab or Gigafactory as they've coined it and their unique fulfillment center. So they're building North America's most automated optical lab With the capacity of over 4,000 pairs of glasses per day, it's got the lowest manufacturing costs in the industry, not to mention it's the fastest. That means they're able to benefit from reduced carrier rates as they see that speed of delivery improve, and they've already invested the capex required to scale their revenue to 200 million plus in terms of their annual revenue run rate. So this facility is over-engineered and it's ready to take on the growth that Kits is expecting over the next couple of quarters. So if you think about that on a quarterly basis, you'd be looking at about $50 million per quarter, which is essentially double where Kits is at currently based on their Q4 numbers. Now, before we get into their go-forward plans, I wanted to talk about another key metric, which is obviously customer retention. They've got category-leading retention at Kits Eyecare. This is really a metric that doesn't make a lot of headlines. Obviously, it's second in terms of revenue, gross margin, and some of those other headline-catching metrics. But if you take a close look here, you guys, whether you're looking at 12-month, 24-month, 3-year, or 4-year retention rates, Kits continues to see industry-leading retention that's well above the industry standard you can see here in the gray line, regardless of the year that you're actually looking at. So this is another reason that supports that bullish thesis and why I believe Kits is going to continue to snowball both in terms of their user base and their share price in years to come. Now, speaking of years to come, they also talk about their 2023 roadmap and beyond. So I wanted to call out these points as well, especially for anyone who's looking to make a purchase or investment in this company. First is their continued revenue and customer growth, their market share gains, which we just talked about. Obviously, their manufacturing facility is already set up and capable of supporting this growth. Their focus on gross margin expansion, which we already saw in 2022 as they move into the growth in specialty segments. They've got ongoing innovation in fulfillment and product that drives their NPS or Net Promoter Score and customer retention, as we just talked about. The fourth point here on their go-forward plan is to expand partnerships and growth of their Fulfillment by Kits or FBK platform. And fifth and final point here, which I love to see as a prospective investor, is a focus on a healthy balance sheet and growth funded from cash flow originating from the business. So they're not going to go out and find financing or dilute existing shareholders. They're going to continue to manage their growth based on the business's operating cash flow or the income that they're deriving from their existing business unit. So for me, this is definitely one to keep an eye on. Again, no pun intended, you guys. We're starting to see some major growth from Kits Eyecare. It's already doubled in share price since we covered it last year. And this is one that I think has the ability to continue to grow and scale for many more years to come. Now, we've seen a number of huge brands originate in Vancouver, including Lululemon and the Whistler Blackcomb Group, both of which I followed closely and unfortunately missed out on. This one is another one that I think you should definitely put on your watch list. Again, leave a comment in the section below and let me know if you've already invested and what your thoughts are on Kits moving forward. If you're still watching the video at this point in time, hopefully you found some value, so make sure you hit the like button. And if you're not currently subscribed to the channel, McNallie Money, feel free to join. We'd love to have you as part of the community. That's all for now. Thanks for watching, and we'll see you in the next video.